today's class, and today we are on GBP/USD, which is Great Britain pounds against the US dollar. So today's class we're going to be talking about trend, support, and resistance. All right. So first of all, okay, we're going to be looking at trends now. From your chart, okay, from what you can see on the screen, what do you think, or what kind of a trend do you think we are having on the chart right now? Just pause the video, maybe you think of it, and then I'm going to give you like 5 seconds to actually give it an answer. So what trend do you think we're having now on the market? Well, if your answer was an uptrend, then you were wrong. But if you said a downtrend, then of course you are correct. So tell me what you actually, or what your answer was at first in the comment section. I really love to see it. Okay, so currently we're on a downtrend, all right? Because if you can see very well enough, of course, anyone who has eyes can actually see. So now we can say the market is going down. So of course, this is a downtrend, all right? So now from the previous class, we said downtrends are made up of what? Lower lows and lower highs. Okay, we said a downtrend is made up of lower lows and lower highs. Now I want this class to be practical and realistic, all right? Or should I say real? Okay, now we're not really going to pay much attention to the textbook kind of pattern, but then this is what we actually said. All right, now we said a downtrend market is made up of lower lows, okay, lower highs, and then lower lows again. All right, so this is a lower high, this is a lower low, all right, this is a lower high, all right. So this is what we're basically going to be transferring to the real price movement, all right. Now that we know that the downtrend is made up of lower lows and lower highs, let us, okay, bring it down to the real life chart. Okay, so now I'm gonna try to highlight, I'm gonna highlight the lower lows and lower highs of this market. Okay, so come with me or work with me, all right? But then one simple way you can also know a lower low and a lower high, also one simple way you can, beginners, I understand most of you are going to be beginners, so one simple way you can get to actually easily highlight your lower lows and lower highs is by using the line chart. So you just come up here, all right? Because my mouse, if you just click that place and then you select line. Now, it's going to be similar to what you see in the textbook. So at this point, you can easily identify your lower lows and your lower highs. But then, I'm not training you guys to remain beginners. I want you guys to become good professional traders. So this is just something you can start up with. But for the sake of this class, I'm not going to be using the line chart. I'm going to be using the candlestick chart, all right? Because this is what you're basically going to be facing in real life, all right? So now from here, we have this to be our lower low, all right? We have that to be our lower low, sorry. Now we have this to be our lower high, okay? Now, we have this over here to be our lower low. We have this over here to be what? Our lower high. Now, it's not going to be 100% exactly or it's not going to be 100% like what you see on your charts or what you see on your textbook. Sorry, I mean those lines we just draw like I did earlier on. It's not going to be 100% like that. All right, we are trying to give you a clue of what it is like. But then, of course, see, the reality here is that when you come to your real market price, like what we have on the chart right now, you're not going to see, you're not always going to see it happen this smooth. No, it's not always going to happen this smooth. In most cases, all right, in most cases, you are going to have something like this. This is the truth. In most cases, you have something of this nature. Okay, let me say you have something like this. Guys, it's not going to always be smooth. It's not going to always be smooth. In most cases, you're going to have things like this. So that is why I'm actually using a real market example to actually illustrate this, all right? So let's keep on going, guys. Let's keep on going. Let's keep on going. Let's keep on going. Now, I have this to be my lower high. Now, my next lower low is going to be here. Don't worry, guys. I'm going to explain why that's my lower low. My next lower high is here. My next lower low, of course, is here. Now, my next lower high, I'm going to love to put it here, all right? My next lower low is here. Don't worry, guys. I'm going to explain later on. Just keep Go with me. My next lower high, sorry, is here. Now, where happens to be my next lower low? Okay, I'm gonna love to put it here. My next lower high is here. My next lower low, you see, it's a bit tricky right now. It's a bit tricky right now. My next lower low will be here. My next lower high will be here. My next lower low is going to be here. My next lower high is going to be here. My next lower low, I'm going to love to put it right here. My next lower high, I'm going to love to put it right here. And then my next lower low, I'm going to love to put it right here. Okay, price has not yet formed the lower high. All right, now I'm going to trace this. Okay, and then I'm going to show you what it looks like in the real life compared to the textbook version. All right, now we have price moving this way to our low, to our high, to the new low that formed the new high, lower low, lower high. All right, lower low, lower high, lower low, lower high, lower low here, lower high here, lower low here, lower high here, lower low. Okay. All right, let's just leave it that way. All right. Now, I'm going to take this out, guys. Do you see the difference? Do you see? Now, this is a real market move. All right, that we just derived. But then if you check in your textbook, of course, you're going to give it the usual beginner vibes and tell you it happens this way. But now we are just trying to illustrate, okay? But then when you come to your real chart, you are not going to see something like this. All right, you're not going to see something that easy. Now, this is a real market. This is a real market price. All right. Now, I want to explain why whatever I highlighted here is a higher low or a higher high. All right. So, guys, go with me. I'm going to delete this. I don't want to use these traces. I want to use real price movement. Okay. Now, let me zoom in a little. I'm going to zoom in a little. All right. I'm going to zoom in a little. Sweet. Now we have price coming down here. I told you on a downtrend, we only want to see previous low broken. We do not want to see previous highs broken. All right. So what validates a downtrend is that the previous low keeps getting broken. All right. So at this point, we have price do this. So this sell move here, it broke below this low. So it means this is a new lower low. All right. Don't worry, guys. I'm going to explain why they happen to be the new lower low, and then I'm going to come back to explain why they happen to be the new lower highs. All right. So I'm just going to highlight this. Just give me a few seconds. All right. So that when I come to explain, it's going to be much easier. Okay. Now, okay, I think I'm going to use this. Okay, let me just do one more. Then I'll explain. All right, now at this point, I've just discovered something right here. All right. Now we have a lower low here. Thank God I zoomed in. We have a lower low right here, and then we have a lower high right here. All right. Now, why is this a lower low? On a downtrend, we only want to see the previous low broken. On a downtrend, we do not want to see previous highs broken. All right. So this high that engineered the move that broke below previous low happens to be what? Our lower high. Now, this is a lower low because this low is below the previous low that formed. This is a lower low because this low is below the previous low that formed. This is a lower low because this low is below the previous low that formed. All right. So you can see this low broke below previous low. So it's a lower low. This low, okay, you can say it broke below previous low. But now, is this a lower low? Of course, even if you see that's a lower low, you're not going to be wrong, because if we go down to a smaller time frame, we are going to see that as a lower low. But I wouldn't really consider that because it is not so much very significant. So in most cases, too, you should look for significant structures, right? You should look for significant structures. Now, in this case, this is a lower low, this is a lower high. Now, this lower high went above previous high, which we do not want to see in in the downtrend. But as you get more advanced, you understand why you can actually experience it in some certain scenarios. All right. So on a downtrend, we only want to see previous lows broken. Now, this is what previous low, previous low, previous low. All right. So we want to see the lows broken on a downtrend. We do not want to see a high broken on the downtrend. All right. So now this high seems to be the lower high because it is the last, or it is the highest high before the move that broke previous low. Now this high happens to be the lower high, the lower high here because it is the last high, the last highest high before the move that actually broke what the previous low. Okay, so same thing here. This is the highest high. All right. Simple question. Why didn't we use this high? Because it is not the highest. We did not use this high because it is not the highest. This one right here is the highest. Okay, so it is the highest. It is higher than this one also. So this is going to be our lower high. It is called a high for a reason. Okay, so it should be the highest high. All right. Let me explain more examples and then we're going to go on. All right. So this is what the lower low, it broke previous low. This is what the highest lower high. All right. Is the highest lower high what before the move that broke previous low. Now, why didn't we use this high? This is also a high. This is also a high in this whole range because we didn't use this high or this one because it is not the highest high. This high is the highest high before the move that broke this structure. All right. So same thing here. We have this low, we have this high, we have this low, we have this high, okay, which is higher than this one. So this is going to be our lower high. All right. And so on and so forth. Okay. So this is one thing you should know about trends. Okay. I'm going to try to maybe go through it on an uptrend structure. All right. So right now on the screen, we have an uptrend structure. Okay. So I'm going to be highlighting that of an uptrend just like we did. But this time around, I'm going to be using the part 2. Okay, so we have this to be our low. We have this to be what? A high, a low, higher low, higher high, higher low. Okay, higher. Now, this is not so much very significant. Okay, this is not so much very significant. But then I'm still going to highlight it and then I'm going to explain something later on. Now, this is a high. Okay, now this is a low. Okay, this is a high. This is a low. Okay, and then let's stop there. All right. Now, on an uptrend, we only want to see the highs broken. We do not want to see the lows broken. All right. So, in an uptrend, we only want to see what higher highs and higher lows. Of course, this is what higher high, higher low, higher high over here, higher low over here, higher high over here, higher low over here, higher high over here, higher low over here. Okay, so we have this to be what? A higher high. Now, this low broke below previous low. Now, this can happen in some cases, and then you actually understand better when we get more advanced, okay? I don't want to get you all complicated right now with some terms, but then that is why in most cases, I would love you to stick to the more significant structure, right? Of course, you can also see the more significant structures broken, but then I will explain that when we get more advanced, all right? So for now, this low was broken, all right? But then price still maintained the uptrend and then it kept going up. Lower, higher low, higher high, higher low, and then the higher high, all right? So now this happens to be what? This happens to be a higher low because it is the lowest low that engineered the move that broke above previous high. This happens to be the lower low because this is the lowest low before the move that broke previous high. Same thing here, lowest low before move that broke previous high. Lowest low before move that broke previous high. Lowest low before move that broke what? Previous high. Lowest low before move that broke previous high. All right, don't forget, in an uptrend, we do not want to see the lows violated. All right. So now, this, of course, I just remember something now again, okay? We talked about impulsive move and corrective move, all right? So now in an uptrend, the sales are the corrective move. Now, in an uptrend, we only want to catch buy trades. We do not want to catch sell trades, okay? I told you in the last class that it is best for you to trade in the direction of the trend. So it means that in an uptrend, you should try your best, okay, to catch only buy trades, all right? So now, as this is an uptrend, all these intermediate sell moves are retracement or corrective moves, all right? All these sell trades are retracement or corrective moves. But then you see this buy trade, the buy here, all right? The buy here, okay? These are the impulsive moves that we look to catch. when you come to a downtrend, all right, these whole buy moves are retracement. So we do not want to care about them. All we want to care to catch are what the downside move. So we want to catch this sell. We want to catch this sell. Okay. We want to catch this wholesale. We want to catch this wholesale and so on and so forth. All right. So you can see that the buy that happened in between are not so much compared to the sales. All right. So next, now we're going to dive into support and resistance. All right, so one thing I want you guys to understand now about support and resistance, okay, at this level is that first of all, support and resistance is not a line, all right? Support and resistance is not a line, it is a zone. Okay, it's a zone. Now, in the previous class, I spoke about support and resistance, swing points, and all those things. Okay, so now we are going to use the live example we have on the chart right now to identify those things. All right. Now, of course, you should know that every high and low right here are swing points. Okay, so on a downtrend, all right, we're going to be making most use of what? Of a support. All right. Now, I'm just going to highlight them. Let me use a different color. All right. Let me use gold. All right, that's sweet. So now. Okay, so I'm just going to be highlighting them, and then we're going to keep going that way. Now you can see that it is not as excellent as it was shown on the textbook. All right, so you're most likely not going to see excellent projections that way. All right, it's not going to be 100% as perfect as it was shown on the textbook. All right, now these are swing points. All right, the highs and the lows here are swing points. Now, how do you use support and resistance to get or to catch the beginning of impulsive moves? Okay, now first of all, price acted as support right here, but the moment price breaks through a support, okay, the moment price breaks through a support, it has a very high possibility of coming back to that support and making it a resistance. What do I mean? In this case right here, price did what? Price acted as support right here, but then price came down, it broke through that support. So what did price do? Price later came back, retested the support, and then the support acted as resistance for a sell move. Okay, same thing happened here. Price broke through support, price came back, retested it right here. Same thing happened here. Price broke through support, came back, retested it right here. Price broke through this support, came back, retested it right here, and then went bearish. Okay, so now price has done what? Has used support in this case, all right, to push the market down. Or you will have actually used support in this case to actually catch the beginning of the next impulsive move. Yes, of course, you might not have caught all of them, but at least you caught this one. Let's assume you did not catch this one. All right, so you caught this one. Let's say you did not catch this one, but at least you caught it from maybe from here, or at least you caught this one right here, and then you caught this one right here. Okay, so maybe out of how many trades? Out of, let's say, like 5 or 8, maybe you got like 5. Maybe like out of 8, you got like 5 or 4, and it's a good one. All right. So these are swing points. These are swing points. These are swing points. All these are swing points. Okay. These are swing points. These are swing points. Swing points. Swing points, and all, and so on and so forth. All right. So now this is the support level that price did what? Broke through, retested. Price broke through this zone. Okay. Retested over here. Broke through, retested. Broke through, retested. Okay. So now let us look at it on the uptrend perspective. Now, on the uptrend, we want to be making use of resistances, okay, of this swing point, of resistances over here. Now, don't forget, I told you that support and resistance is not a line, it's a zone, all right? So, okay, so, all right. Now, at this point, you can see that price is what? This is a resistance, okay? So, now, what I'm going to explain here is the inverse of what price actually did on the downtrend, all right? So when price breaks through a resistance on an uptrend, once price breaks through it, there is a very high possibility that price will come back to retest that resistance, and the resistance will then act as a support level, all right? So let me just use a part 2 to explain what I actually mean. So if price moves this way, okay, we have a resistance level over here. Now, if price goes above this resistance level, which means price broke through this resistance, there's a very high possibility that price will retest what? That resistance level, okay? And then at this point, that zone will now act as support for price to go on, to go up. So that is basically what happened here, okay? We have what? We have this high, price broke through this resistance over here, and then price came back, and this resistance acted what? As a new support level. Same thing happened there, price broke through, and then this resistance level acted as a support, and it pushed price up, okay? Same thing happened here, all right? This resistance level, price went up, came back, respected that zone, and then this resistance that actually occurred here ended up becoming a new support level, and then price did what? Scaled up, all right? Now, even if you extend it right here, you extend it this way, you still have one, okay? This resistance turned support right here, and then it pushed price a little bit higher. But then from this area, we had what? A downtrend. As we go on, I'm going to show you how to know that the downtrend is coming, okay? Now, that is what you're going to learn in the more advanced session, all right? So for now, I believe I've been able to do justice to this trend, support, and resistance. I want you to go to your chart and please study this, all right? If you're not practicing, you're going to be shooting yourself on the leg. Practice and make yourself good. Practice and make yourself better. Do the assignment. Go on your chart for everything I've done. Now, what you should do, okay, the assignment for this class is go on your chart, okay? Go on your chart, highlight uptrends and downtrends, just like I've done. When you go, highlight the higher highs, the higher lows, the higher highs, higher lows. Do it on 3 different currencies, all right? On 3 currencies of your choice, okay? Highlight the higher highs, higher lows, just like I have done in this class, okay? Just like I have done. Do it for uptrends, do it for downtrends. Practice the support and resistance model, okay, which is these things I drew here. How price acted as resistance, came back for support for a buy. How price acted as resistance, came back for support here, and then practice all these things, okay? Go back to price, to past price history, okay? Just like here now, you have a downtrend. What you should be doing is doing what? What you should be doing is highlighting, okay, this is a high. This is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, and so on and so forth, and that way, okay? Then you come back, you practice the support and resistance model. Oh, this is a resistance, price acted as support right here, so I will have actually got to the beginning of the impulsive move up. Do the same thing, and then you're going to get better, all right? So this is your assignment, and you should do it. If you don't do it, you're not cheating me, or you're cheating yourself. All right, so I believe this video was helpful, and I believe you've gained a lot of things from this video. So until I see you in my next class, I wish you a happy learning, happy trading. So I'm going to catch you in my next class. Bye.